Hello, this is Coach Mike from winningstockcoach.com. I'm going to get started with my weekly market overview video for the week beginning July 20th, 2015. Starting out here at the SPX weekly chart, that's the chart for the S&P 500. Since bottoming out a couple weeks back, made one heck of a rebound, especially over this past week. We actually managed to close just barely above our weekly swing high point, 21.2606. With this 21.2664 close. We had that longer term target 21.78, and at this point, that shorter term target point that we actually came just shy of on this dip back here, this 21.3893. I think that's the one we're going to want to watch for here to see if it might be our resistance point, and maybe just get a little bit of a short-term long trade if we break above, we'll say 21.40, and trade it into that 21.7838 plus or minus the 0.5%. Overall on the SPX though, really what you'd have to look for as far as momentum type trade after breaking the swing high point is simply allowing that to serve as your support. So it's only about 55-60 cents downside as support for the momentum trade, like if the momentum were to continue. If not, as far as for swings, I really think that if you look back at similar patterns right over here off of this morning star, that following week gave you the 50% retracement of the move. If it were to be a bad week, that's probably what we'd see, and we might even see it off of this high point around 21.0999. And if we do see that and we do see it hold, let's look at using that as, a positive move after bouncing off of that could be our entry for some swings up into that 21.78 target area. Now we're going to go over to the DJI chart. That's the Dow Jones Industrial. You see our last downside target. It put a wick below it the week before last, but still managed to close above that. So we're going to delete that, and using those same points gives us 18,232.03. Again, almost there. Almost there. This one did not break that prior weekly swing high point. Let's use that. If it's going to give us any type of market breakout, let's use that break, 18,272. Yeah, 18,272.56. A break above that gives us a simple momentum trade, and if we see the SPX breaking on momentum, we could actually get a lagging effort from the DJI, but a lagging effort that would be easier to trade without chasing. Let the SPX make the move, watch your DJI, and that could be any DJI stock too. Goldman Sachs, Nike, it could be Lockheed Martin, it could be Apple. Start to watch those to make that break and get your momentum trade on those ones as well. As far as downside right now, we still have the swing low support for the DJI 17, 712, 66. That's our weekly close support. You see a couple weeks where you put the wicks below it, it still held it, and because it held it, it made the positive move from it, and that's what we really need to be watching for. Okay, now we're going to go over to the Russell 2000. We had this swing target here. Well, it hit that and then started pulling back nearly immediately, barely went above it. Let's delete that one. And then we had the downside target here, which it barely, just a couple pennies below it. So let's delete that one. And we're going to use those same points, this low, this high, this low, to give us a target point with continued up move here at 13.1085. Now, another thing we need to watch that could still pose a little bit of danger is this swing high point here, 12.8466. It's close enough to it. You could let it break it. You could maybe scale in, take a small buy if we continue positive tomorrow. You take the small buy for the up move, and then once it breaks it, add to it, average up. And then your support really for any more upside in small caps is 1248 area, 1248.26 for a weekly close. And we'd want to make sure definitely that it held that, or you'd want to probably be short in it. And finally, over to the NDX, that's the NASDAQ 100. A little bit different story here. We see our first of two short targets was hit right here. So let's delete that one. And we actually have to delete this one because we broke that high that it was based off of. And then we actually broke out through our first target. I've talked since March, April, actually late February, early March in my market overview videos about a slow run that would be wicked and hard to trade, but up to that 46.90 target area. Well, if you stuck in stuff for that, good on you. It was slow, it was wicked, hard to trade, but just like anything else in trading, those with the mental capacity for longer term trading prevailed. And those without that mental capacity struggled with those difficulties. So at this point in time, use that 45.94 area as your support. And if we hit into this 46.90 to 47.25 zone and begin to pull back, great trade in your NDX stocks. So this one, to me, a little bit end of the road, but if it keeps pushing higher, we've got some room in the SPX for momentum. We've got, if we get that momentum trade in the SPX, the DJI just barely trailing behind. And then we've got the Russell, the small cap index, the RUT, that is really just starting. So if we get that continuation, look at your RUT first for your swings. Trade your momentum trades off the SPX. While you're looking at that cyclical wave pattern to maybe be exiting your longs in technology, NDX-based stocks, and be smiling that you had this video series all along to help lead the way. This is Coach Mike from winningstockcoach.com, wishing you the best of luck in the upcoming trading week, and God bless.